Let's focus in on Dabur's strong domestic volume growth at 12% plus has really cheered the street, and there's been broad-based growth as well. Lalit Malik, CFO of Dabur India, now joins in to dissect the quarter gone by. Congratulations, because it's definitely been a very healthy set. I'm going to start off with that headline number. The breakup across the board of all of your categories seems to be very healthy. What really has led to this sort of a double-digit volume growth of 12%, and do you think that we can see this continuing into the coming quarters?
Well, I think what we have seen is a very positive growth in all the categories, whether it is health supplement, whether it is hair care, personal care, skin care, and even for food. So overall, we have seen a very positive growth in this quarter, and that too based on the last year same quarter where the base was also high. So I think it has been very encouraging with regard to the demand side that we have seen in this quarter, and therefore all categories have shown a very healthy double-digit growth for us in this quarter.
Could you just tell us about, what's driving this growth? Now, company has done a lot of investment in distribution, going to the rural space. There was a quarter where you saw 20% plus growth, and then there was a disappointment of 8% in Q2. Now it's a good 12% number that we are talking about. When do you expect it to stabilize in terms of the entire numbers, entire volume growth, make it much more predictable?
Well, I think there are a couple of factors which are relevant for the fluctuation that we see. Last quarter, when we saw that the festival season of Diwali was shifted to quarter 3, so therefore quarter 2 was a little depressed, and what we have seen is that there is some positive element of the Diwali gift pack has pushed the sale in this quarter. So therefore there will be some element of seasonality that we will see quarter over quarter. Having said that, I think overall if we look at it from the annualized basis, we will be having a low double-digit volume growth as we'll close the year. That's the expectation that we have.
Let's just talk about the rural investment that the company has done. So about 2-3 years back, the company was constantly investing into rural, constantly investing into distribution. Has that started to yield results when you're showing this 12-13% number in terms of growth?
Certainly, I think we have expanded our rural presence, we have expanded direct reach to the rural market, and also at the back of fiscal stimulus, we have seen the rural demand growing for us as compared to the general trade of the urban demand. Though even in the urban area, we have seen the modern trade growing very well for us. But if we just talk in terms of the general trade, we have seen a very healthy growth in the rural market, supported by the strengthening of rural initiatives, strengthening of our direct reach to rural market, and strengthening of our portfolio in the rural market. We have seen a very healthy growth, and at the same time, we mentioned earlier also, we have focused on few key brands where we have gone ahead and invested. In the case of Pudin-Hara, in case of Lal Tel and Honitus, and that has also given us a very strong growth in this quarter. So I think overall supported by the regional initiative under RISE, supported by expansion in rural market, and supported by the investment in the brands and going after to increase their growth, we have seen overall a very positive trajectory in all categories.
Your margins have come in at 20.2% versus about 20.5%. So there's not been too much growth there. Just take us through what you're penciling in by way of the margin trajectory, and what is the trend on the input cost front?
Sure. I think what we have seen is there has been an inflationary pressure that we have seen on our input costs, and our efforts have been to absorb it through our efficiency and the balance through a partial price increase also. But what we have seen is that we have seen in terms of inflationary impact on the input cost, especially on the oil, LLP, and also on the crude, having some impact on the inflation. At the same time, there has been a product portfolio mix where we said earlier that in case of a juice category, where due to the Diwali gift packs there is some pressure on margin. So put together, in the Indian area, we have seen there is a pressure on the input cost. Although for the international market there has been an exchange in some of the countries which has got a major impact, primarily on account of Turkey, on account of Nigeria and Pakistan. We have seen the currency on the translation is having a negative impact, and also in the